Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Sunday for Sunday, January 9th, 2022. I'll be joined today by members of the media, academia, and financial services as we analyze all the news in retirement, markets, lifestyle, tech, wellness, so much more. So sit back, relax, enjoy this episode of BRN Sunday. Happy New Year, everyone. Let's kick things off and look at what's going on in Capitol Hill. And joining us on the line, they're known as the Legal Eagles, but they're also known as David Levine, Kevin Walsh, both the principals with Groom Law Group, an employee benefits law firm based in good old Washington, D.C. Gentlemen, Happy New Year.
Happy New Year. Thanks for having us on. We took last weekend off, so this is our first segment of the new year. And we just hope that everybody out there has a better 2022 than they had 2021. Whether or not they had a good 2021, we want 2022 to be brighter and better.
Absolutely. David, you want to – I know we're going to take a look at what 2022 might yield for us in the retirement and benefits space. Do you want to kick us off?
Sure. I'm going to take the low-hanging fruit, Jeff. And Happy New Year to all our listeners, and thanks as always for having us, Jeff. I think that the way to begin is there will be regulation. How is that for going out nowhere on a limb, Jeff? Normally, Kevin, I guess he's giving me a pass, would be jumping down my throat at this point. So let me try to be more precise. For the new year, there's a lot out there to happen. I'm going to start actually with the IRS for a moment. The IRS, we are going to get guidance from the IRS on probably some of the remaining items that are open on the Secure Act. Secure Act seems like so 2019 at this point, like 3 years ago. But there's a lot of operational items that people are still saying, how does this work? Especially on like the A72 minimum distributions. Without getting wonky, I'll say that's something that a whole corner of our industry is waiting for because they're trying to figure out, what are you supposed to do? These new rules are messy. Also, on the Department of Labor side, because we know they get a lot more attention from us, and we don't mean to slight the IRS, on the Department of Labor side, there's a lot that's coming down the pike. You obviously have more ESG and proxy type of guidance and clarification coming down the road. We always love to talk about our cybersecurity, and we could get more cybersecurity, more privacy type of guidance, because we do know that the DOL investigations have been edging into privacy some. Mm-hmm. Lastly, not to hit the big elephant in the room, the DOL has been continuing to, I'll say, evaluate. And then I'll add, and one more thing after that. The DOL has continued to evaluate their views on fiduciary and conflicts of interest. They obviously have delayed a little bit of the implementation of the prohibited transaction exemption from the Trump administration, some to the end of this month, some till later this year. But there's definitely more that could be coming. And it could really be in the form of investigations about conflicts, and it could be very much important given all the M&A that's happened in our industry. And I will say, you'll see more M&A this year. And the one more thing, may sound boring, but the 5,500 reporting, we got a little bit of guidance right at the end of the year that made it a little easier for pooled employer plans to report. They're still moving forward on that. And there's a lot of questions there. I think people understand the DOL wants data, but there's concerns from some about the DOL creating a new roadmap to say it's all about the cost. And ERISA doesn't say, to be prudent, it's only about fees. So there is some trepidation, but we also understand where the DOL is coming from. With that said, Mr. Walsh, what would you like to pick up on?
Wow, David, I feel like I had so many openings there, and I'm left saying, I agree with what he said. Because you covered so much of the waterfront. I think what's left is really a little bit on litigation and a little bit on investigations. And I think in the year ahead, we're going to see a more active DOL on the investigation front. 2021 was a bit of a slow year in terms of opening new investigations. So my thought is they're probably pivoting to additional areas. We've been hammering missing participants it's 2022, so I guess 8 years now. Missing participants has been kind of a primary focal point. Towards the end of the year, we started seeing more on cybersecurity. So I think we'll see a lot more of that this year. And I wouldn't be surprised to pivot to investigating service providers, particularly as the temporary enforcement policy on rollovers, sunsets. Lastly, on litigation, there's that case pending at the Supreme Court that discusses, what a prudent plan fiduciary does in terms of picking between investment options, particularly where, you might have similar or the same options at different levels of cost. I think, as we see that case get decided, it could either lead to a springboard of way more fee cases being filed, or it could lead to, the plaintiff's firms not going away, but having to go back to the drawing board and, trying to find a new angle for, bringing the types of excessive fee cases that we've seen so many of in the last few years.
Gentlemen, if I'm hearing it correctly, it's kind of status quo, more of the same.
Well, it's a lot of stuff that has been building. To me, it's a lot like Les Mis, where at the end of the first act they sing "One Day More."
Hey, Kevin, don't ruin the play for the three people who haven't seen it.
It's the end of the first act. Well, I think we're crescendoing towards. There's a bunch of initiatives that have been underway for a while that we're likely to see. That have been crescendoing for a while that we're likely to see real action on this year.
Go ahead, David.
And Jeff, to Kevin's point, the Northwestern case could leave it unchanged. It could make it harder to bring the suits, or it could open floodgates. And if it makes it harder or unchanged, we don't always agree with the plaintiffs' lawyers, but to be realistic, some of them have come up with are very smart, and some of them are very innovative. They came up with a lot of innovative new concepts in the past year or two with privacy, data sharing, cross-selling. There's a lot more that, they may come up with. So never underestimate, and in this case, I'll use the word in quotes, your opponent.
Absolutely. Well, gentlemen, great to see you. Thanks so much for kicking off the year with a look ahead. And what's great is that we'll have you back next week and weeks ongoing to check in and see where we met the mark and what's happening on a regular basis. Gentlemen, take care. Have a great rest of the weekend, and we'll talk to you again very soon.
Talk to you next week, and thanks, listeners.
Bye, gents. Welcome back, and now we're going to shift gears, talk a little technology and consumer products. And joining us on the line, he is the managing editor of The Street, Daniel Klein. Dan, great to talk to you. Happy New Year. Thanks so much for joining us on the program this morning.
Jeff, good morning. Thank you for me getting all time zone messed up this morning and missing our appointment and doing it again. So I appreciate it.
Absolutely, and I know. You've had some logistical challenges where you are. You're still at CES.
Yeah, I was supposed to be on a plane today, but I have fallen victim to something many Americans have. I've written a number of stories since Christmas about the sort of massive flight cancellations. There have been thousands of flights canceled every day. And largely it's because of COVID. Not so much that anyone is sick, but if you test positive, you have to quarantine for 5 days now. It used to be 10, now it's 5. And that has wreaked absolute havoc with airlines. In my opinion, I'm not sure why the pilots have to quarantine at all. I never get to see the pilot. They're just in the room with the other pilot. I fully understand why it has to happen. But I'm in Las Vegas, and my wife suggested, she might be right, my cancellation might be weather-related because it is, of course, as you know, snowing on parts of the East Coast. So I'm not entirely sure, but normally I'd be excited to spend one more day in Vegas, but I'm not sure that a full week in Vegas is something anyone needs.
Well, Dan, before we get into the consumer, the CES for 2022, which I know you wanted to talk about, break it down for us, let's talk a little about rebooking and getting yourself on a flight. I think that might be interesting for the audience to hear because there's machinations that have to happen. I think we've talked about it before and what people need to do. How is your planning?
So it's never ideal. So here's the problem. If your flight's canceled like 24 hours beforehand and they rebook you, you could pretty much handle whatever happens. But at dinner last night, I checked into my flight and everything looked good for I think I had a 9:30 a.m. flight because when you leave Vegas, it was 3 hours coming back. But I didn't want to leave too early, but I also didn't want to leave too late. And then when my flight got canceled, they rebooked me without me knowing it for 6 a.m. And the problem is by the time I noticed it, it was close to midnight. And that maybe is a little bit too quick of a turnaround for me. So it wasn't all that easy. Normally with Southwest, where I have some status, you can just go into the app and change things. When your flight is changed due to cancellations, you have to call. And I'm not sure how well their call center is staffed at 3 a.m. East Coast time and midnight West Coast time, but it took a while. And by then there wasn't anything left and pushed back a day. And again, not the end of the world. And there were some other airlines, if I had chosen to just pay for another flight and cancel my Southwest flight, which is something, they let you do. But it's not easy. And it's also, it feels to me in this day and age of automation and AI, when your flight's canceled, you could just get texted some choices. Like, do you mind leaving earlier? Would you rather leave later? And the fact that none of it was there. It's also still weird to me that I fully understand that airlines can't deal with acts of God, but there's no provision to cover hotel rooms or, I'm at CES. In a normal year at CES, I wouldn't be able to book a hotel room if I didn't have one already. Fortunately, we're well below capacity this year, but it's a system that's lagging, and I actually think it's something that airlines will probably spend a lot of money on in the next decade because, Jeff, things should really be automated and simple. And when one thing happens, they should be giving you a next best case scenario. And I'm sure if I desperately needed to get home, I guess sleeping 3 hours and getting up at 6 a.m. would have been fine. But, not perfect for everyone. But I do see, this is an area that should improve.
Yeah, absolutely. Well, we hope that you get home in a timely manner, and hopefully your flights are no longer delayed. Dan, let's talk a little bit about the Consumer Electronics Show. Last week when we talked to you, we knew that T-Mobile, Microsoft, some of the bigger brands pulled out of actually having their big booths or big sessions. How was CES? What can we look forward to? Did you see anything of interest?
Jeff, it was very, very strange. So first of all, there's just whole empty spaces on the show floor because when you have a company that was taking, 2,000 square feet pull out, it's not like you could put potted plants there and make it look busy. And the way these convention center works, as you know, in between shows, they basically strip it down to the studs. So some of the empty areas are just plywood unfinished flooring. And they dressed some of it up a little with seating and things like that. But I've been going to CES since 1994. I wasn't yet 21 when I went to my first CES show. And that was a show that took place in about half the convention center. The other half of the convention center was adult videotapes because that was the number one consumer electronic product at the time. So they piggybacked on the Consumer Electronics Show. And CES has grown into this massive thing that not only takes over the entire recently expanded Las Vegas Convention Center, which is just a massive facility. I literally took a Tesla underground through a boring company tunnel between parts of the convention center because it's about 1.25 mile walk. It filled the whole convention center typically and multiple hotels and secondary convention centers. This was very muted. And I have a picture in my phone that I'm going to try to use for a story, and it's of the LG booth. And why did I take a picture of the LG booth? Because there's nothing in the LG booth. It's empty and just has a bunch of hanging QR codes that you can scan to go look at the products, which feels to me like maybe LG mailed its booth or shipped its booth, but then didn't want to ship any people or any stuff. And a lot of things were like that. They just didn't have – there'd be one or two staffers, and there was very little media there. So having a media badge, we basically got whisked in. I was with my friend Matt Frankel from Motley Fool, who I think you've had on.
Yep, I know Matt.
And basically we were treated like royalty. But, Jeff, you've been in the media room for events like this. Sometimes it's hard to get a seat. This, you and I could have, played pickup football. There was that much. We would have had to move the tables. So it was a very strange year. The safety protocols were relatively unbelievable. You're handed 2 tests when you get your badge. You were instructed to take a test before you left, which I did. I'm sure plenty of people ignored that. But you were given tests that you could take before each day when you walk in. And again, I'm not sure everyone did it. I'm not sure everyone who tested positive but has no symptoms chose to then not go. but mask use was enforced and 100% prevalent, but there just wasn't that much to see. Some of the big auto companies, John Deere had its automated tractor, which has got a lot of attention, which, my God, it was like meeting Optimus Prime. Like, it was a pretty cool piece of machinery. All of the electric vehicle companies are here in some fashion. And Jeff, if you want, I did go by the Bugatti shop, and they had a $4 million Bugatti or a $1,000 Bugatti scooter. So you just let me know which one you want. I'll bring you one back.
Yeah, put me down for both, Dan. Dan, so typically CES is where we see the latest. I mean, everything from new appliances to I think you and I have talked over the years about a toilet that can sample your urine to see how your health is doing. Anything that really stood out, or is this really a dull roar from CES, which would be atypical?
So I'm sure you're going to see media reports of some of those items, but none of the major companies, with really the exception of the auto companies, because the auto company, their GM made some announcements. Amazon is buying some electric vehicles from a GM subsidiary, which is kind of a blow to Rivian, the electric vehicle company that Amazon has a big stake in, that sold like 8 cars and has an $80 billion valuation. So there's a little bit of news there. But when you watch the news reports and they show you the robots and the other, refrigerator that can do your laundry and make you a cappuccino, those aren't coming from the big companies. Those are coming from the secondary parts of the show where you see a lot of speculative stuff. You see a lot of companies that are showing things that maybe their goal is to sell it. Look, I've gotten like 15 different invites to go see a smart dog collar. I don't have a dog. I don't wear a dog collar, so that I'm really not in the demo for that. But usually you see a mix of companies you've never heard of showing that, and you can figure out if it's a real thing if you go by like the Samsung booth, and Samsung also has that. I did go by the Samsung booth, which I don't remember if it was manned. But you're seeing sort of the same stuff you saw last year. The high-end refrigerators with screens built into them, the ones that tell you if your eggs have spoiled, but nothing. And frankly, I haven't seen anything revolutionary at CES for a very long time. There's a lot of talk of metaverse, and that came up a lot in the press conferences. But since, a decade ago when it felt like 3D printing was going to have a moment, which it kind of never did, I think we're dancing around different trends. We haven't really figured out home automation. We really haven't figured out security. I mean, Ring announced a new $40 device that can tell if your window breaks, which I guess is pretty cool, but that's incremental. No one's getting too excited about that. In walking around the 2 main show floors yesterday, other than some really cool looking electric vehicles, which are, not innovations, they're just like the current models, and BMW had a color changing car. That was kind of cool. But I didn't really see anything that I was like, oh, wow, this might be the next big trend. You saw a lot of eyeglasses that have, AI built in or heads up displays, but that's just not that new. So I think this year the reality is you weren't going to get your bang for your buck holding a CES press conference. And many of the ones I went to virtually, and they're a little short on product announcements, where usually you go to CES and there's always like 3 things that you're like, oh my God, like, Amazon bought so-and-so, or this company's working with that company, or, there's a robot that I thought was a person, like, and, you're really just not seeing that because if the big media is not here. I'm big media, but normally CNET sends, hundreds of people, The Verge, all the tech publications, and they're just not here. So I'm not sure what the point is of, having a big product announcement when you could maybe do like a virtual day or an Apple style event and just get a lot more attention after the show.
Dan, has this pandemic dulled or blunted the impact of CES and shows like CES so that, to your point, you just have your own event? We've obviously had to change how we do business because of this pandemic, and so does CES still hold the same weight and gravitas that it did, and will it again?
So something has been changing for about a decade. When the Apples of the world realized that they could do better on their own and didn't really need a CES. It's very expensive to exhibit at a CES if you're a big company. It's millions of dollars. That doesn't make sense for the absolute biggest companies, but the reality is your tech publications, they might send somebody to the twice-a-year Apple product event. They're not sending somebody to the twice-a-year LG product event or Bosch or any of these secondary companies. So I do think we've seen this idea where, like, the Microsofts of the world, Microsoft hasn't been exhibiting at CES most years, or they'd have a small booth, but then they would take a suite of hotel rooms. And if you wanted to go see Microsoft people, you kind of had to give them a few hours. I think that had been happening and will continue to happen. But once there's no more COVID restrictions and it's a normal world, I do think a lot of business is done at CES. A lot of people go simply because the other CEOs are there. The other executives are dealing with things. And I do think you'll see a return to that. Look, right now it's kind of unseemly to have the parties and the dinners and all the events you would normally have. I'd be sorting through, like, which company wants to spend hundreds of dollars to take me to dinner so I can listen to their product pitch. And that's not really happening this year for obvious reasons. People are being careful. There's a lot of distancing and not a lot of interaction. But I actually think next year CES, assuming we're not dealing with the whatever variant next year, I actually do think we'll see a bounce back and that everything will be solid.
Well, Dan, we're going to leave it there. We appreciate you joining the show, especially given that you had to work through all these additional logistics. Safe travels getting back, and we look to chat with you again next week, hopefully from your home. Have a great rest of the weekend.
Text me where to drop off your Bugatti. I'll talk to you later.
It's on the way. Thanks, Danny. Bye-bye. Welcome back, and now we're going to close out the show with a look at what's happening in the real estate market. Joining us on the line, he's a real estate reporter from Market Watch. We're talking about Jacob Passy. JP, great to talk to you. Thanks so much for joining us, and Happy New Year.
Same to you.
Thank you. So what's top of mind this week? I know we've seen mortgage rates begin to surge, but what's top of mind in terms of your reporting for Market Watch this week on real estate?
So that was a big topic of conversation. To start the year, mortgage rates were significantly higher. They rose, around 11 basis points, which is 1%. So, but that was a pretty, on a weekly basis from the previous week back in 2021. And they're up, significantly compared to a year ago. This time last year, according to the data from Freddie Mac, the benchmark mortgage rate, the rate on the average rate on the 30-year fixed rate mortgage dropped to an all-time low, and that's the record low was set in the first week of January last year, and then moved upward since then, but kind of like with stops and starts. It fell a little bit in the summertime when the Delta variant became a concern, but now we're in a different situation, and it really is looking like mortgage rates are going to rise in the near term, but certainly throughout this year.
And we've talked about it all year long in 2021 that the expectation was rates are going to rise. Does this blunt the housing market at all? I mean, would you expect demand to be quelled, to be stifled at any rate by slightly higher interest rates? Because by all accounts, it's still historically low.
Yeah, so in terms of demand, when you look at, for instance, the application data from the Mortgage Bankers Association for mortgage applications, that's still really strong when it comes to loans used to purchase homes. So far it has not, the increase that we've seen up until now has not, significantly decreased the demand. The other thing to keep in mind is, yes, rates are rising. No one really is expecting them to rise, much above 4%. And in fact, I think some economists even think they'll still be below 4% by the end of the year. That, and from a historical perspective, that is ridiculously low. I mean,
Yep.
Folks who bought homes in the 80s paid, upwards of 10% for with a mortgage or whatever in terms of interest. So it's still very, very low from a historical perspective. In terms of demand, if there were people who are going to be, there might be people at the margins for whom a home purchase is no longer as affordable with rates rising. But at the end of the day, the major driver of home purchases right now is demographic changes. I mean, we're seeing millennials, reach the peak kind of home buying years, and contrary to the common wisdom of a few years ago that suggested that perhaps millennials were perfectly happy to be renting apartments in big cities for the rest of their lives. No, in fact, millennials do want to own homes. A lot of them moved to the suburbs over the past year, and plenty more are considering those sorts of moves because when they get married and have kids, perhaps they're doing it a little later in life than previous generations, but those are still goals for many folks. And so, it's the largest generation in the country now. And it's going to, those millennials are going to drive a significant wave of home purchases, not only now, but for many years to come. At the same time, we just don't have the inventory. So that's the other thing is, that is probably the bigger barrier for folks right now is the lack of homes for sale, more so than rising interest rates.
Any change to that potentially in terms of inventory, Jacob? I mean, are we seeing more housing starts? Are we seeing more homes come on the market? I would still think it's a seller's market.
Yeah, the home building data, it's definitely still a seller's market. The home building data has improved in recent months, certainly, and the pace of home building activity has certainly improved. In terms of the level that we need to be at, we're still well short of that. And, there's possibly an extent to which home builders won't be able to build at the pace we need them to fully erase this kind of gap we have between demand and supply. And home builders are facing their own major headwinds still. Supply chain issues are still a concern, perhaps not to the same extent as early last year or last summer when late lumber was still really hard to come by and other building materials. But if you look at, the ports in California and stuff like that, certainly we still are experiencing backlogs. So that will slow builders down. Labor is another issue. And it's interesting kind of in the context of, this week's jobs report that came out, which was somewhat underwhelming in certain ways and fell short of expectations. When you drove down into the data for employment in the residential construction industry, there was a slight dip between November and December, although the December 2021 employment numbers were much better than the 2020 employment numbers. So year over year, there's been a lot of growth in hiring, and a lot of people have been employed by the construction industry, which is good. But there's still this kind of gap between the number of workers that are available and the number of workers that are needed to do construction projects to be able to build at the pace that we need home builders to build at.
Last question, Jacob. What about credit scores? We're seeing a surge, an increase in rates. I mean, has anything changed in terms of how you qualify for a mortgage, for the mortgage rate? So the rate may be whatever 3% or somewhere around between 3 and 4, but you don't always get that rate if you apply. So is there even more scrutiny? Are there things that people can be doing to better improve their prospects for getting that low rate, even if it is not the lowest historically?
Yeah, well, it's interesting that you bring up credit scores because, a big driver of the rise in interest rates has been this expectation that the Federal Reserve is going to ease off on some of the stimulus-related activity that they've engaged in recent months, in recent years, really, to stimulate the economy and help it bounce back from the pandemic. And so, top of mind for a lot of folks and in the headlines is, interest rate hikes that the Fed is expecting to do. But they're also planning to scale back their bond buying, asset buying activities. And one thing that the Federal Reserve has been buying a ton of over the past 2 years has been mortgage-backed securities. So a couple weeks ago, I did a story looking into this because there was this concern that I had, or a question that I had, which is, if the Fed isn't buying those securities, is anyone going to step in to buy them? And if no one steps in to buy them, what does that do to the mortgage industry? Because as part of the ecosystem, the money that lenders earn from selling their loans to be securitized, that helps to fuel more loans. It's a whole, it adds liquidity into the system. And so I was like, well, will it be harder to get a mortgage? And what I learned from economists, and this is still the general line of thinking to my knowledge, is that mortgage lenders, because rates are rising, it's harder for them to do business. And the reason it's harder for them to do business is because they can't just rely on a ton of people coming in wanting to refinance their mortgage. Over the past 2 years, when rates were dropping to record lows over and over again, there was this steady stream of applications of people wanting to refinance their mortgage. So without that, they have to turn more of their attention to home buyers. And those are harder. Those are a bit of a harder sell, in part because, they don't have a pre-existing relationship with you and things like that. So it's a little harder for them to get that business. And so in many ways, they are competing on making it easier to qualify. At the beginning of the pandemic, a lot of lenders imposed these overlays, credit overlays is what they refer to them in the industry, but basically the, stipulations of what you needed to meet in terms of credit score, your income, things like that. They made it harder to qualify for a mortgage, and part of that was done to reduce the risk. They didn't want to lend to someone who's going to lose their job the next month and go into foreclosure or something like that. Now we've seen those go away to a large extent, and so as those have gone away, it's gotten easier in a lot of ways to qualify. So that is the one good thing, which is, it might be easier to actually qualify now to get a mortgage to buy a home than it was, a year and a half ago, 2 years ago. But there are still things you can do beyond that. If the larger down payment you have, not only does that reflect positively on you to a lender, but they will, reward that by either lowering the rate. Sometimes you can do what's called purchasing points, which is basically you can essentially prepay the interest rate down. So you can spend a little money up front with your closing costs to buy down that interest rate and lower it a bit. And to the extent that you can, offload any other debts you have to reduce your debt to income ratio, because that's another thing they look at. That's another way that you can stay competitive. And all that goes into the interest rate you're going to be offered. If you appear to be less of a risk as a consumer to the mortgage lender, they will then offer a more competitive interest rate to you.
Yep, and that seems to be the tried and true method. Seems to be even in today's environment. Jacob, we're going to have to leave it there. Always great to chat with you. Thanks so much for joining us. Happy New Year, and we look forward to talking to you again very soon.
Talk soon. Take care.
Bye-bye. And that wraps up this episode of BRN Sunday. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the information in lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives or check out our latest content? Then, of course, visit our website and our streaming partners like Amazon, Roku, Samsung, and over 100 more. We're back again tomorrow for BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.